Good afternoon, everyone. We're going to kind of wait probably about another minute before we kick off because the audience is steadily building as people are let in by the system. And I can see that that's happening quite quickly at the moment. I don't want to kick off until we've got a maximum number of people available. So, but in the meantime, I'll tell you a little bit about the AIM Group. For those of you who don't know us, hopefully not that many of you, we are the leading provider of business intelligence services for business to consumer marketplaces. So specializing in the autos, homes, recruitment and horizontal marketplaces space. And we do three things. We provide online subscription news and analysis. We run conferences, including AutosBuzz, which this webinar obviously follows on from. And we do a little bit of consulting. So that's us in a nutshell. They say that an expert is someone who's made every mistake in a very narrow field, and that probably just about sums us up. So the format for today, I'm going to talk for about 30 minutes, and then we're going to have a couple of minutes from our partner Kaisa, presenting on their services that are relevant to this, well, both to this presentation, more broadly to auto marketplaces. And then we're going to go for questions. Please put your questions in the chat. You can put them in the chat during the session. You don't have to wait until the question time. So if something comes to mind, just pop it in there, and the questions will be moderated. And Kate Kavanagh is going to be asking me questions once we get to that point. Anyway, so I think it's now probably time to kick off. So I'm going to share my screen. So just 1 second here. And hopefully it will share. Good. So today we're going to talk about 7 pointers for the future from AutosBuzz 2024. When I looked at the audience list earlier, I think about 30% of you actually came to AutosBuzz, so fantastic to have you online again. And I think about 70% of you are new. So I'm going to mix in a few of the facts that we learnt at the conference, as well as some new stuff that really summarizes what we see as some of the key lessons from the conference. So and kick you off, I'll just give you a sense of what those 7 key pointers are. So first of all, very end of the conference, we had a very good session summing up the conference with including Malcolm Myers for European Internet Ventures. And we will touch on what the likely outcome is of the PE ownership of Adevinta. The deal closed on the 29th of May, I think, and it's now owned by Permira and Blackstone and others, but they're the lead PEs, and we'll touch on what that might mean for Adevinta and competition in markets in general. Second, we're going to talk about C2B. Huge topic at the moment, huge growth in C2B, particularly across Europe, but elsewhere as well. However, we think it's going to be challenging for marketplaces to play in that space. So I want to give a feel for that. OEMs, marketplaces and OEMs, traditionally, marketplaces have been predominantly used car with a degree of new car. We think the time is coming that marketplaces and OEMs will both want to get closer. I want to touch on why we think that is and where we think that might go. Then talking about the future as well, want to look at the deal builder model very briefly, because we think certainly in developed markets, this is probably the way forward for many of the leading marketplaces, or many marketplaces, full stop. And we'll give you a sense of why we think that. The digital retailer model, certainly at the moment challenged in Europe and developed markets, but we think it still has high growth potential in growth markets. So we'll touch on that as well. COVID. Well, I think our key conclusion is COVID hasn't changed very much at all. We're back to the world as it was before, but we'll touch on consumer behavior in general and where do we think the key changes are likely to be. And the seventh is, sorry, lost my 7th point. AI, we're going to touch on AI, what it's likely to mean for autos marketplaces and how we think it might help some currently complex operations. Now, just before we go further, we're going to run a very short video for our partner, Kaisa, and then we will come back and start the presentation proper. So I'm just going to stop sharing for a minute. Please run the video. Brilliant. So let me get back to my presentation screen and let's run with this. So I'm going to kick off just with a slide, an updated version of the slide I shared at the conference, looking at how revenue sits against market share with marketplaces. And this is taking the revenue per car sold in any country, that's all cars sold, irrespective of whether they were sold through the marketplace, and looking at traffic share of the number one relative to the number two. So very dominant players will have very high traffic share relative to number two, be at the top of the chart. Very strong monetizers will be on the right of the chart. And kind of to draw out a couple of obvious conclusions. One, that there still seems to be, for most marketplaces, a lot of upside potential. If you look at the top performers like car sales and Bilberson in Denmark, we believe there's still substantial growth beyond where car sales is in the market, particularly as new services are introduced. There are businesses like Auto Home in China, which do very well on this chart, and that's because of the mix of business that actually used cars much smaller. So new car is a dominant part of that revenue, and it kind of pushes up, and finance pushes up as well. And I think both of those are factors that we'll see come more into developed markets. And then, you know, above the line, we have those who are lower monetized relative to their market position. Above the dotted line, you'll see we have some of the growth markets like Baltic Classifieds Group in Lithuania, Estonia, strong potential to still build monetization in those markets. And then you'll see we have Mobile.de in Germany, well under monetized versus, say, Auto Trader and car sales. And the hypothesis here is that through a long period of ownership as part of a kind of conglomerate, first at eBay, first owned in eBay by eBay Classifieds, and then now by Adevinta, that Mobile really hasn't been monetized, and other businesses within the portfolio haven't been monetized as strongly as they could be. So the other autos businesses, and we're beginning to see Mobile push much harder now, strong revenue growth over the last couple of years, and a kind of different attitude to pushing forward pricing, etc. But when we got to the last session of the conference, the summing up was that the most likely outcome, now that Premier and Blackstone and others own Adevinta, is a breakup over time of the business and selling off the different elements of it. So we wanted to say, well, what might that look like in practice? So if we think about a scale, we've got both very strong businesses within Adevinta, autos businesses we're talking about, and we've got weaker businesses. And by weak, it doesn't necessarily mean poor quality. It could also be smaller scale businesses that are harder to sell in different ways. And at the strong end of the scale, we think businesses will be fattened up and sold off by IPO. And at the weaker end of the scale, you might get trade sales and possibly private equity turnaround fund sales. And then there are kind of different positions in between. So if we go through the scale, it's been for a long time suggested that Mobile could be IPO'd, and we think that's the most likely outcome there. In many of the cases of the autos businesses. We've also got an associated horizontal. In the case of Germany, it's Kleinanzeigen, and Kleinanzeigen clearly has some strength, particularly in C2C, and supports the core business. Would you IPO the two together? I'm kind of doubtful of that, because I think the market will want value in a kind of clear focused vertical. But what we suspect will happen is that the horizontals will enter into kind of long-term contractual relationships in terms of how they work with the verticals, and that will kind of help protect the flank and retain the support of the horizontals. Could be different in different markets. There could be others, particularly at the weaker end, where you might get the horizontals and the verticals sold together, as happened in the UK with Gumtree and Motors, for example. So if we move along the scale, we've got probably the next strongest, Le Bon Coin, horizontal in France, fabulous business, loved by the public, and strong across most of the vertical sectors. We think that will also be IPO'd. We think it'll be more strongly verticalized, invested in to strengthen it, and likely to also go eventually to an IPO. We then look at Spain. Coches.net, it's a bit unfair to say it's weaker. It's actually a very dominant player in the Spanish market. No other competitor in used cars near it. However, it's a much smaller business, and Spain is a difficult IPO market, and hard to see it kind of being bundled with others for IPO. We think much more likely that it'll be developed further and then probably sold on to another PE. And we've seen this happen in Spain with Idealista in the real estate market, that kind of progression of consecutive sales to PEs as the business builds over time and as funds need to realize their assets. So moving on, let's look at Marktplaats in the Netherlands. Marktplaats is, we believe, the leader by revenue, very strong in C2C, strong at the lower to mid end of the dealer market. And there are two strong verticals also within the Netherlands. And I think a really interesting question is, could you find a way of either trading assets or pairing or selling that actually brings one of the verticals together with the horizontal? That could make a very interesting play in really strengthening the market position. But again, likely to be sold to a PE, very strong transactional business in the horizontal as well, and a very strong market position overall, given that there's no eBay or eBay equivalent in the Netherlands. So a good business. In Belgium, we've got slightly weaker in terms of autos. We've got the French and Belgian versions of secondhand. I'm never sure how to pronounce them. And yeah, more likely, I think in Belgium, we'll see this sold for its horizontal strengths rather than being a kind of core autos focus. And there is a question with some of the horizontals of whether you might keep them together as a group, build a transactional horizontal business. So not necessarily kind of sold off together. At the weaker end of the market, Italy's always been a challenging market for most to monetize most classifieds, much smaller businesses, and therefore probably more at the end of a smaller PE or even possibly a trade sale for that business. And then outside of Europe, we have Kijiji in Canada. We think that Adevinta has been trying to sell this for quite a while. It's a challenge. We think this is probably a gradually deteriorating business in cars, playing against a very strong competitor in Auto Trader Canada, much more likely to be sold as a horizontal than as an autos business. So we can see some real potential livening up, some real pushing of pricing as these businesses are developed. And that will actually give the second businesses in the markets quite a lot of opportunity as well, because the super seconds are dependent in terms of their pricing on what the number ones do. So they should actually help the seconds as well as the firsts as these kind of businesses are kind of pushed further and faster. My favorite quote that came out during the session of AutosBuzz during the conference was your margin is my margin, a Jeff Bezos quote. Sorry, your margin is my opportunity, a Jeff Bezos quote. Steve Greenfield of Automotive Ventures quoted this, and he did a really fantastic pitch about why Amazon is the biggest threat in the market. And I think one of the conclusions we took from a lot of people talking around the session was that actually most people are very skeptical that Amazon can play seriously in the used car market. And for once, I actually disagree with Steve, very, very rare. But I think Amazon's got potentially an interesting position it could develop in new cars. And we're seeing in LATAM, Mercado Libre, the equivalent of Amazon down there, already playing with manufacturers in new cars, particularly some of the Chinese manufacturers coming in, selling direct into the market, etc. But we believe that the used car market is far too localized, and the businesses are becoming much more sophisticated in the way they transact and different country by country, and that will make it hard for a big global player like Amazon to play effectively in the used car business. But why do I like this quote so much? One reason is that when I look at the market, it seems there are three big profit pools in the dealer space. There is the metal margin, the margin on the car itself. There is C2B, the trade-in margin, and there is financing. So car financing in totality. And at the moment, marketplaces really only play primarily against the metal margin, taking very little money out of those other two profit pools. And I think that's one of the areas that people are increasingly looking at for opportunity. So turn to C2B then. We're seeing since COVID, and in part, I think because of the real push the digital dealers had into driving marketing for online transaction, both car buying and car selling, we've seen a real increase in the revenues and the volume going through C2B businesses, and also the quality of those businesses and the reduction in things like haggling in terms of pricing for consumers, and a big rise in kind of consumer trust in them. And whether we look at Auto1 in Germany, or in the UK, We Buy Any Car and Motorway, or in Norway, Netbill, in all of these markets, we see substantial growth since 2020 in the C2B space. So raises the question, is this somewhere where marketplaces can be playing more strongly? And clearly the number 3 of those, Netbill, is owned by Finn, the leading Norwegian marketplace. So we can see there's been some M&A work, M&A activity in this market, etc. But what's the potential to kind of build a really big C2B business within existing marketplace businesses? We had fantastic talks at the conference on C2B from James Wilson, the COO at Motorway, and from James Hind, the CEO and founder at CarWow, who are also doing C2B, not on the chart here for the UK, and also from the Netbill senior team as well. And I'm going to just pick out Motorway for an example here to kind of give you a sense of why I think there are some challenges for marketplaces in getting into these markets. And the UK is obviously a particularly intense market. We had a particularly strong drive into digital retail, and that's really helped most of the online sales businesses drive forward reasonably fast. So if we look at Motorway, it's growing pretty fast. GMV 30% up in 2023 to 2.2 billion. What does that mean? Well, we've only got revenue numbers from 2022 so far. The 2023 numbers aren't out, but we estimate that it sold about 150,000 cars in 2022. There are some hints that our estimate may be an overestimate, and actually the average price of cars that it's selling may be higher than we'd anticipated. It used to be these businesses were very much in the low end of car sales, but the digital, the low value car sales, low value car sales, but the digital models and the improvements in models are actually driving the average price of car sales up. And we're seeing a lot more higher valued cars going through these services. It made revenue of about 41 million. That means about 2.4% of the price of the car sales came back as revenue into Motorway. And the business made a loss, a negative profit margin of 105%. So it actually spent more or lost more than the revenue. I think it was about 43 million loss. Why was that? James, talk us through this. Huge investment in marketing in 2022, real drive forward, huge investment in product, a huge amount of innovation going on. And that's innovation both at the detailed functionality level, but also in terms of new products. For example, a digital wallet product for dealers to make it even easier for them to buy, trade, keep money available in the right ways to make the business work. So why do we think this is so challenging for marketplaces? We think it's challenging because marketplaces are very high margin businesses. They're reasonably easy businesses, or straightforward businesses to operate. They don't tend to be very intensive in terms of people and operational management. All of these are challenges that marketplaces are not used to. They also need a very high level of investment if you're really going to win out in some kind of interesting competitive markets. So, and particularly those that are publicly listed will find it very hard to reduce their margins and put in the kind of investment needed here. One of the figures that struck me really fascinating was comparing the sizes of the product and tech teams. Motorway, 180 people just dedicated to product and technology on C2B. If we can compare that with the leading marketplace in the UK, Auto Trader, it has around 400 people for all of its business, including C2B, including the main website, including the stuff it does in wholesale and etc. All of that around 400 in total. So you can just see the scale of kind of activity and investment going in, and the kind of level of focus. And very impressive when James talked about how the business is run and how it really pushes a very aggressive innovation agenda. Of course, it's not all big numbers, and the most fascinating number of it all was perhaps Netbill in Norway, still running a business successfully with only 18 product and technology people on a very strong growth path, as we've seen before. So there are clearly, size of market, scale of market, etc., factors involved. But these are big investment, complex operational businesses. Most of the transactions have people involved in managing them through, etc. We suspect that the most successful developments will be through M&A, as Netbill has been. Although I do believe there is certainly, at least in Australia, I believe car sales' C2B business, organically grown, is the leader in the market. So it's certainly not impossible for marketplaces to do well. But I think we're going to see a lot of kind of focus in this area. One further outstanding question is, has a lot of this growth simply been due to the undersupply in cars, the high pricing of used cars, the high margins available? Has that kind of inflated the level of trading going on through these businesses? I think it's still going to take a while for the supply situation to unwind, and it's going to be interesting to see whether they can still maintain the levels of growth and move forward at the same pace once supply returns. So moving on to OEMs, a quick look at what the expectation is in the long term for used car sales and the OEM and franchise dealer share of used car sales. I borrowed some numbers here from Arthur D. Little from the report quoted here. It's our own chart that we've created just to illustrate it. And what you see is in projecting where share of used car sales will be in Europe in 2030 versus 2022. Arthur D. Little are projecting that OEMs and franchise dealers will have increased their share by about 35%. And that will take it to about 51% in total of the market by that projection. Why do they believe that? Well, agency coming through, OEMs wanting to own more of the life of the car, going into the used car cycle as well, and then the question of what franchise dealers do under agency, where they're getting less profit from the new cars. They're likely to push much more into used, and that means they're likely to be in to take share out of the the independent dealers. So what's the flip side of this growth? They see a fall in the market share of independents by about a quarter, and they also see a very strong fall in consumer to consumer. So this will both be addressed more by dealers at the kind of higher end of value in C2C, but also the C2B businesses beginning to take more share out of the market and push them through dealers, etc. So you're looking at a kind of view that says actually OEMs and franchise dealers, and OEMs because of the nature of the agency relationships, are going to be particularly important going forward. So why do we think marketplaces and OEMs really need each other? What we're seeing is very much a strong decline in brand loyalty. In part, that's being driven by the EV transition, and clearly the EV transition is bringing new OEMs and brands into the market. But actually, it goes back before that. Cars are more consistently reliable. Consumers are much more comfortable choosing between brands, and also consumers are much more comfortable now trading off between new and used cars. So for OEMs, it's going to be really important to be seen in multi-brand environments, and marketplaces therefore will be increasingly key, both for new, but also as they begin to push further with franchise dealers into the used space as well. So we've also seen the failure of many of the OEM's own marketplace initiatives. For example, we've seen Heycar withdraw from 3 of the 5 markets it was in, Heycar being the JV owned by various OEMs collectively, including Volkswagen in Germany. And so I think we're seeing very clearly that those initiatives and initiatives to pull their own cars in their own services that are just their own collection of brands, like Stellantis' Spotcar, those are all not gaining traction and share with consumers. The traffic still remains solidly on marketplaces. And then finally, we've got the potential return of oversupply in new cars, and the dynamic where new cars won't simply fly off the shelves in the way they have been while they've been in short supply. All of those are very good reasons for OEMs to want to work more closely with marketplaces going forward. On the marketplace side, the move to the agency model is something they need to protect themselves from. And clearly, if OEM share both selling directly and through franchise dealers is growing, and OEMs are much more influential in the relationship on how those cars are sold, then the marketplaces need to grow closer. But there are also some other good reasons. The new car opportunity, I think, is growing substantially, particularly because of the trade-off between new and used, and potentially, manufacturer direct to consumer also creates some interesting possibilities for how you use channels in different ways. So we've also got, coming in the Chinese and other brands. So we've got new brand direct to consumer coming, and the potential to work with those brands. And with EVs, we've got a strong move towards more leasing and broader financing opportunities. All of those represent, I think, an opportunity for marketplaces. So it seems to us, and we're hearing very much from the conference, that there's actually a very strong opportunity to build closer relationships with the OEMs going forward. And it was particularly interesting to hear James Hind at CarWow talking about their relationships with OEMs. If for those of you who know the story of CarWow, which is a new car marketplace in the UK, back 5-6 years ago, the OEMs really didn't want to work with it, tried to kill it in lots of different ways. Now it's partly owned by various OEMs. It has a range of direct-to-consumer relationships, and James articulated the need for, very strongly the need he's seeing for OEMs to be in multi-brand marketplaces, and if they're dealing directly with consumers, to get channels out that they can get large-scale supply effectively running. So we think marketplaces and OEMs is going to be a big trend growing closer over the next few years. So moving on to where do marketplaces go in their development? We believe that the deal builder approach, as being developed by Autotrader in particular in the UK, but also elsewhere, is likely to be the key way forward for marketplaces. We think the direct consumer initiatives like Smile and the equivalent tried by Mobile in Germany are probably at their end. Although it's very interesting to note that they haven't been withdrawn from the market, either of those propositions. They're still being supported and developed, but they're not scaling substantially at this stage. So there's a question in there, is this still just a learning experience, or do the marketplaces feel there might be some broader way forward on direct to consumer? But much more likely, we think, is the Autotrader style arrangement. And here you can see Autotrader brought it out of pilot, their deal builder proposition, in April. This was the homepage of Autotrader yesterday. They're now beginning to promote it to consumers much more strongly, beginning to educate, and you can see the final stage in the deal builder is being able to reserve your car for just £99. That's a refundable reservation, but it's a way of making sure that the people reserving are serious. One of the top-rated sessions at AutosBuzz was from Carolina Edwards-Smider, who is the Chief Product Officer at Autotrader, and she gave a very in-depth view of how Autotrader has developed Deal Builder and the kind of complexities involved there, and the kind of detail that they've gone to make this work effectively. So what is Deal Builder, for those of you who might not be familiar with it? It allows the consumer on a marketplace site, on a classified site, to do four things. They can submit a part exchange if they want. They can complete the finance application fully online. They can arrange for delivery and collection. In the case of Autotrader, this is through the delivery and collection provided where it's provided by dealers, and you can reserve the vehicle. The consumer has total choice about which of those elements to do. They don't have to do all of them. What do we know about Deal Builder? We know that Autotrader have built it, as they described, the hard way. It's very flexible for buyers, and it's very much an online-offline hybrid. And there is a huge amount of capacity behind the scenes for dealers to be able to access the information in it, so that they can run finance, run part exchanges in a hybrid way, and the consumer can either complete those actions online or offline. In terms of performance, Autotrader are reporting a 2x conversion versus normal listings. And for those advertisers who are really well optimized with great pictures, etc., for advertising online, conversion is up to 70% of the leads generated by it. And when we look at revenue, they're talking about the potential for at least 2x revenue per car in the future, and they expect the charging to be a combination of subscription plus a transaction fee of some form. We're conscious that in other markets it will come more slowly. The UK, because of the huge amount of competition between Cinch and Kazoo and advertising for buying cars online, has been kind of well lined up for this. But we believe other markets will develop similar activities, and though it's a slow process of changing the way people buy cars, that this will come through as a more fundamentally convenient and easy route. I'm going to leave this one for the moment. This is probably the most photographed chart. It'll be in the deck to download, and it gives you a sense of the level of detail that Autotrader go into in thinking about these things. But it also shows that actually the consumer is finding the bits they do online at the moment the hardest bits, not the offline bits. And Deal Builder is about really making that online side easier. So next conclusion, where do the digital dealers go? We've seen the collapse of Kazoo and Cinch in the UK. We've seen Carvana collapse temporarily in the States, and we've seen Auto One have to draw back across Europe. The model seems to work at scale. Carvana have had a massive bounce back. They've made the business profitable in Q1 of this year, driving a gross profit per unit of around $7,000. Huge amount of that coming from finance and warranties. The big question is, can the same be repeated in Europe? At the moment, Autohero and within the big countries is really the primary player. Much more challenging to reach GPU levels because financing is much more limited. And at the moment, it's at a very small scale in volume. So this is the one to watch, I think. If there is going to be a player across the big European countries, it's almost certainly still going to be Autohero. But will the business manage to get to scale in the right way? I think there's still a range of uncertainty. In the UK, we still have Cinch playing. Part of BCA, a different kind of strategy, synergy with wholesale dealer groups, etc., is what Constellation Automotive has been building. 167 million loss in the year to March 2023. This is a tough business to get together in a single country. So perhaps some much bigger questions there. So whatever happens, we see digital dealers as a small share of the market going forward, may get to 5% for the kind of people who want to buy online in that way. We see them now very much as customers rather than competitors to marketplaces. Much more interesting is the digital dealer model in growth countries. We believe much more opportunity. Had a very good speech from, or interview with Omar El-Dwahi. Defray, Omar El-Defray, I think that's the pronunciation, of Cylinder, about growth in Egypt, of growing an $80 million business in around 12 months in this space. We see the growth markets as much more interesting and this model as being much more attractive. We've got fragmented, unsophisticated dealer networks typically. We've got low consumer trust, which the model really helps with. We've got high growth in used car sales because these are markets that are still developing and used car sales penetration isn't at its height, and the evolution from new to used. We've got relatively undeveloped car financing, which opens a whole set of interesting opportunities in terms of revenue model. And we've got dealers cautious around advertising, which has typically made the marketplaces less strong. And we've got wholesale still at a very early stage. All of that, we believe, produces a real opportunity to grow what we think of as hybrid dealerships in these markets that aren't already dealer saturated. So in a sense, you're building a very different type of future dealer model than you have in the dealer saturated European and American markets. So we think the model still has a lot of legs. We also heard at the conference from Kavak about its developments, pushing into more countries, including Turkey and some of the Middle East. And very interestingly, we heard from both Cardeco and Car Trade in India, both of which, what struck me was how much more they're into finance, how much closer they are to the transaction. And I think it's an indicator that these transactional businesses are actually developing faster and in more interesting ways in the growth markets than they are in the main markets. So what did we learn about consumers? Very simply, I think it's very clear from various conversations that COVID hasn't changed anything. People's behavior is back to where it was pre-COVID. EVs are clearly going to have some degree of impact, but at the moment things are slowing up. Regulation will almost certainly ultimately drive penetration though, particularly in Europe. The two big kind of indicators are that consumers really need help to understand choices, and there's clearly a very good opportunity for marketplaces there. And secondly, leasing, because of the risks in terms of the higher prices, in terms of the residual value risks, and also currently the cost of living challenges, leasing is really going to be a much bigger thing in many markets for EVs. So those are the interesting areas for marketplaces to focus. The other big area we see changing is Gen Z coming through. In 2024, there are as many Gen Zers in the working population as there are boomers, and they're now overtaking the boomers. They are clearly going to be an important part of the car buying population in the coming years. We see within this group a lower take-up of driving licenses, Not clear if that's just a life stage thing, if once they begin to own homes, have families, etc., that will change in a different way, but it's partly about the expense, partly about the alternatives available to them. These youngsters didn't grow up with the intense marketing of autos brands that most of us grew up with. They really want convenience, so they're very open to online transaction. They are open to other mobility options, but that's mostly in the city. So we're seeing take up of other forms of mobility and mobility subscriptions, etc., in the city, but more rural, less developed areas, much less so. Same kind of need for driving. And these millennials, and I have an 18-year-old myself, so I know this personally. They live in a very video world. They have the highest use of voice search. So when that becomes more sophisticated, they're likely to switch sooner to it than others. And they have the fastest and most regular use of Gen AI. So they're an audience that really needs to be concentrated on for development of service. And they're likely to be the leaders in terms of how AI changes the market development. So I think that's where the most interesting kind of consumer change happens. Moving quickly on to AI, OC&C, the consultants, very simply summed up why we think as well that AI is unlikely to fundamentally disrupt search at autos marketplaces. There's a high customer satisfaction with auto search at the moment, and there's very limited rich external data, which is where and unstructured data where AI can really be very useful. So we and they see search as being something that is probably only going to change, in the near term, relatively at the margins. And therefore, the questions about AI are more how you use it for product enhancement, etc. So how do we see AI being used? If we go from the short term to the long term, at the moment, all of the focus is on efficiency improvement in processes, both within marketplaces and for both consumers and dealers in particular. And we think that is where most of the effort is currently and is going to continue to be. In the longer term, we do believe search will evolve, but we believe it will be relatively gradual. We think it'll become much more interesting when AI becomes capable of giving much more multimedia, audio and video-based services, but that's a long way off. So what we see at the moment is piloting around how you can use AI in search, a degree of using AI across marketplaces as a kind of co-pilot to help improve search, but generally the search being a kind of long-term ambition. So I think the really interesting question is, can you create new services, interesting new services out of AI? We're seeing with motorway phenomenal use of AI to really reduce the costs and improve the quality of C2B services in multiple directions, and particularly where there's been traditionally people and headcount involved in making that business work. We've got a very interesting perspective from Imad Hamad, the founder of CarSwitch in the UAE, which is a C2C business, saying that he's seeing AI potentially as the way to make C2C scalable. C2C, alternative C2C models have been very difficult. They usually get to a certain scale and then become problematic for scaling purposes due to the level of human input needed to make it work. And what they're saying is that they're seeing AI being able to really change that dynamic and take the human power out of C2C. So that might be an interesting area. And it strikes us that in general, customer service related areas and customer service within car dealerships is an interesting area for marketplaces to explore using Gen AI to see if you can really change the way that works and the way communication happens between marketplaces and other sources of interesting questions going into car dealerships. And I was struck recently, I talked to Alex Vetter, who runs cars.com at NADA earlier in the year. He said to me that their chatbot products, which are now Gen AI enabled, had just absolutely taken off in a totally different way with the advent of Gen AI. So what you can do around removing the tasks that traditionally needed people to do, I think, substantial. Hopefully that makes a good place to segue into a short presentation from Kaisa, who are clearly customer experience experts in depth. So I'm just going to switch to Tanguy in 1 second. Before we go though, one last slide. We're already booking for AutosBuzz next year, May 20th and 21st in Berlin. If you haven't booked your tickets, really book them now. They are far cheaper now than they will be closer to the date. So best time to get them. You can sign up already online. Tanguy.
Thanks a lot, Jonathan, for all of these insights. And yes, I'll make sure to be in Berlin next year. So give me 2 seconds. And as you just said, I wanted also, as you just did, to follow up on the presentation we made at AutosBuzz. And it's all connected to consumer insight, to knowing better the consumer, so to help the dealer perform better and to better deliver your business. And the way we've been running that, dependent at Kaisa, we are working today with almost 70% of the dealer in Europe. We are seeing 3 million interaction between consumer and dealer and across more than 1 million unique consumer months. So we've been looking at all of this data across, again, Europe to try to understand who are what we call the high intent consumer, the one that are truly engaging with the dealer, the one not just browsing the website, not just sending an email, but the one ready to place a call and to have a proper conversation with the dealer. And so the question is like, who are they? What do they need? What make them buy? And how can you, as a marketplace, use this data to deliver better service? And so, again, looking at all of this, we've been splitting the consumer across 3 main buckets. And we can see that 32% of the consumer going on your marketplace as unique consumer are going to be what we call comparison buyer. Makes sense. They're going to compare across several listings, actually 4.2 listings in average. But what's interesting is like there's also 20% of them, which is quite a high number, that are what we call returning buyer. They will have multiple high intent engagement with the very same listing. They know exactly what they want. They're kind of hot lead in a way that they got their mind very clear on what they want. And finally, there are 48%, almost half of them, that are what we call the one-shot buyer. They will place across the timeline of 3 months, they will place only one single high intent engagement on your marketplace. Doesn't mean that they cannot browse a few times, maybe send a few generic email, but there will be one single high intent engagement. So for these guys, you really like hope that the dealer is going to pick up this lead to have a good conversation, because if not, they might never come back. So it's quite interesting to start looking at this number and try to see that indeed from the 3 kind of consumer, they expect something quite different, and you as a marketplace should start to engage with them in a different way, to drive them in a different way, and to share these insights to the dealers. Just want to zoom very briefly right now on the comparison buyer, because they're only a third of the unique buyer, yes, but they do represent 3/4 of the total lead you generate, which also makes sense because they are placing a lot of high-level engagement with the dealers. And zooming on them, I won't go through the full detailed presentation, but I will be more than happy to answer any question on that. We've been trying to understand what are the key criteria that are going to drive the search and the decision process. And as you can see here, there's a lot of different patterns. Out of all of this comparison buyer, some of them will be what we call price sensitive. They got a very fixed price target in mind, can be high, can be low, but fixed price target, and they can change make, model, fuel type, etc., as long as the price is the one they got in mind. The way around, 25% of the comparison buyer, they are make sensitive. They're going to stick to Audi or Volkswagen or Renault or Volvo, whatever. But and the price can be twice more expensive. They still want to stick with the brand they love. And a third one that we wanted to have a look at are who are the one looking at the EV, how much the people looking at EV are serious about EV. And actually, 43% of the people comparing an EV will compare with an ICE, with a non-EV vehicle, showing that they still, as Jonathan just said earlier, they need help to understand the choice. They still have lots of questions. And for us, what it's critical is like for you as a marketplace to truly understand this, truly understand who are your consumer, and turn this into insights for your dealer. This is gold information for them, right? If you put yourself in the shoe of a dealer, if you're able to tell a dealer, hey, this lead is reaching out to you, and I can tell you that this lead doesn't care about the make model, this is a price threshold is ready to buy from. Then as a dealer, well, I got all the key to drive the negotiation, to push for it all the way around. He's calling you for an EV, but we know that he's looking at this and this ICE car at the same time with this price tag. Then it's up to you to drive the negotiations and to see if they're serious about the EV. So this is what I wanted to share very briefly. And stay tuned, because this, again, report we're driving across Europe is the first layer of it. We are getting more and more data and more insights that we're going to share fairly soon. So more than happy to expand on this discussion, to share more data with you. And again, stay tuned to the Kaisa news, because there will be more to come soon. Thanks again. And Jonathan, I give you back the floor for the questions.
So that we can pick up any questions directed in your direction. Kate.
Hello, can you hear me?
Be our master of or mistress of questions, I guess.
Delighted to be here. So we've had lots of questions. So thank you to all the participants for sending in your questions. We've had quite a few, and thank you both for the insights. Really, really interesting. Wish we could have listened to more. So first question, can you elaborate on the specific integrations required to implement the deal builder model successfully? And what are the key challenges faced during the process?
Well, I'm not an expert in the depths of the integration, but I can tell you the tiny little bit that I know. I think at one level, you can do deal builder in different ways. So there are examples, and I think Blockit tested a version of deal builder that was done in a very light way, very light touch way that didn't need any real fundamental integration with systems in Sweden. But Autotrader have been quite obsessive about making this super simple for both the consumer and the dealer. And the whole theme of their AutosBuzz presentation was about the simple is complex. So among the things they have done, so they have integrated, and this is across for their broader business needs, not just for deal builder. They've integrated with almost all of the systems providers within the UK, the automotive systems providers, so that all of the deal builder functionality can be accessed in the normal systems the dealer uses, rather than in a separate Autotrader backend an additional system. And as marketplaces will know, there are a huge number of systems typically in any dealership. They come from many different providers, and there are different segments serviced in different ways. So Autotrader's belief was to make the hybrid online offline really work effectively. You needed to have the capability inside the system that systems that the dealers were using day to day. And they've done a huge amount of work on that. But it's also, that work, I believe, has also effectively meant that they have created a kind of single version of truth around what is listed in the market. And they've done a lot of work to improve the quality of the data, because they can access it through those systems and through their APIs and so on. So that's one aspect. Another aspect, they bought a few years ago a financing broker for automotive businesses, and they have used that to really provide very strongly integrated financing that can be used both on and offline, and the deal can be seen through on and offline. Why is that important? You've got a very large number of financing providers. You need to get integrations with all of those. They bought a business that already had a sizable set of integrations, but not by no means all of them. And then that system comes with the logic of being able to provide the dealer's own financing options, which are usually multiple, to the consumer. So you're not cutting across the consumer. And bear in mind, in the UK, we have a lot more banks involved in motor financing than you do, say, in mainland Europe or America, even to some degree. I mean, the American market is still kind of pretty concentrated, so that was particularly important. So all of those kind of things they have done the hard way. But what that means is that you have a system that is very, very easy for dealers to take on and access and use. And they've done a huge amount of piloting on this. I mean, I think it's been kind of in beta for, I don't know, at least 18 months, and a huge amount of redevelopment and amendment of the capability. So we know, for example, I think recently they've rebuilt some of the financing journey because they found kind of challenges around the way it was set up, etc. So all of that painstaking attention to detail.
Okay, so as friction free as possible for the consumer and the dealer as well.
Yeah, I mean, you can go use the journey on Auto Trader and try it out. It is beautifully crafted. It's very user friendly, very easy to understand, and you can just pick and choose the bits as a consumer that you want to use, and that's all part of the strategy. Now, next part of the strategy is clearly going to be education, beginning to market it, beginning to get users to engage more strongly.
Great. Thanks, Jonathan. So the next question, so I made a note of when this popped up. So the question was, what is considered car sold here? And that's when you had slide 3 up. So you know the one where it's traffic share versus revenue per car sold. So what is considered car sold?
So a car sold is any car sold either by a dealer or a consumer to another consumer in the country. So it's all sales to consumers. It excludes trade-to-trade sales. But it doesn't matter whether the car was sold or held on the marketplace. In order to get a benchmark, we just take every car in the country and say, how much money are you making for each one that is sold?
Okay. And then the next one, I made a note of where this popped up as well, because the question is, hello, in your opinion, are the trends you're talking about equivalent for the commercial vehicle market? And this was on slide 9 when you were talking about the OEMs.
So I don't know the commercial vehicle market very well, and I don't know where it is in terms of agency, etc. I think it's quite a different market in terms of structure. But in terms of marketplaces, usually the smaller segments follow at a later stage the bigger segments in terms of how they develop and operate. So I'm guessing that we will see the marketplace trends I've talked about come through in other sectors like commercial vehicles, motorbikes, etc., at a later stage, but it's really the passenger car segment that's going to get, because of the volume and the scale, the attention initially.
Okay. What are the most effective ways for marketplaces to get closer to the OEMs, and can you provide examples of successful collaborations?
So I'm going to turn to Auto Trader again. This may feel a little bit Auto Trader biased, but they are one of the highest revenue, largest, most scaled businesses around, and because of that, they tend to do things kind of earlier than others. So 2 examples of initiatives. So one is native advertising for OEMs. If you go in and you search for specific cars, look for an Audi Q3, you will find native advertising placements from Nissan Qashqai, for example, which is a direct alternative to buying a Q3. So they've done a lot of work to really tailor their advertising model to deliver new car pitches at the right place within their search results for people who may be trading off a Q3 and a Qashqai. And I use that example because I bought a Q3 and the other vehicle I looked at was a Qashqai, so it's interesting to see, or one of the other vehicles that it's there. And you can also see in its very early stage at this point in time is what Auto Trader are doing in leasing. So if you go to the bottom of search results for more expensive vehicles, you will, typically more expensive vehicles, actually maybe it's on all of them, I haven't searched lower levels, you will see the bottom ad is a leasing ad. It's an Auto Trader lease, and in many of them you'll find that these are factory order, so back directly to the OEM leasing deals. So they're trying to find ways of making the leasing market more smooth, more attractive, etc. And that also, you know, when we get back to a world of oversupply, that will become much more relevant, because leasing has traditionally been a way of kind of managing some of the peaks and troughs in kind of OEM delivery. So that's a couple of examples from the UK. And I think, you know, actually, I'll give you one more example, which is, you know, dealer-friendly financing. So the fact that Deal Builder has gone out and made every dealer's financing their own finance, and that creates the opportunity for captive finance to be there in the right places with the OEMs. And I believe that some of the captives are now working with Auto Trader on it. So all of that is about being OEM friendly and about really trying to find models that work commercially for the OEM in the used car space. And the used and new are coming together, you know, much more clearly nowadays. You know, they're no longer two very distinct segments, not least because young used cars are so reliable. And with EVs, that's going to get even more so.
Yeah, if I may jump in, yeah, because we're also working and talking a lot with the OEMs. One field where marketplace and OEM can collaborate more is the lead management, and marketplace tend to share leads a bit the same way with all of the client customer being the dealers. But when you come to the OEM network, which represents a huge amount of volume and big structure and big network, there's definitely better integration, because we know on the other end that these dealer network and these OEM, they just strive to understand how the leads are handled by the team and how they manage and etc. And marketplace can definitely deliver more insights, more data, and get more connected to build something more hand in hands to ensure the lead, the good lead management and follow up afterwards by the dealers.
Thank you. And I actually have a question for you. So Tanguy, how should automotive marketplaces adjust their marketing? Oh, hang on, it just moved out of the way. Bear with me a second. Okay, hang on. How should automotive marketplaces adjust their marketing and service strategies to appeal to Gen Z consumers, considering their preferences for convenience and online transactions?
So that's a good one. For two ideas that pop right in my mind. One of them is giving them the ability to engage the way they want to engage on the marketplace. I'm naturally thinking about WhatsApp, for instance, or this kind of chat and messaging solution. So maybe the classic form or the phone call is not ideal. And when it comes to Gen Z, you need also to adapt to the way they like to communicate and interact. So WhatsApp for me, and we've seen that from our data, that when you enable a chat and a channel like that, you will drive people that like using this kind of channel more than any other one. And on the other end, if we think about also this generation used to online buying and etc., think about when you buy even a t-shirt, you will receive 5 notifications down the road, like when you started your basket, when you paid, when it's going to be shipped, when it's delivered, and etc. Buying a car tend to be nothing when you're going to spend like 1,000 more. So there's definitely for me something here to build trust and show them, and just like share very transparently how the journey is going, why the dealer is not picking up, or why did they pick up, where you are in the journey, what the next step, and etc. So building this kind of personalized engagement down the road, so they feel secured and reassured in this complex buying journey, basically.
Okay, thank you. I'm conscious of time. Do we have time for a couple more questions? Brilliant, let's do it. So Tanguy, this is another question for you. So how critical will 100% correct make data allowing feature search, comparison, selection, and transaction for a new vehicle marketplace success?
So it's essential, obviously. I mean, you cannot run a business and help someone navigate on your website and just filter and etc. if the database in the first place is not fully accurate, I guess. But I would push it even further, and I would say that, and I think it's very true for the new vehicle vertical, because here it's much more standardized. So you can build up more standardized data points, and you can start also better tracking that and helping then the journey to be facilitated. So if you start doing like some kind of configuration or complex search or just some specific features and etc., and then you start engaging with dealers that got no clue about like the hour you spent on the marketplace trying to define exactly what you want, it's quite deceptive as an experience. So yes, it needs to be accurate to do the search and the comparison. I think it's essential also to collect it and to make sure that this data just flow through the journey. So anytime you get a touch point, the person in front will know what you've been looking for, what you're interested in, and can truly help you through this journey.
Just to make it as seamless as possible. And
yeah,
using
exactly.
the right
And you don't have to
information at the
repeat
right
every
time.
time. That's yes.
Yeah. Great. Question for Jonathan. What's your definition?
So you've frozen, but I think the question is, what's your definition of take rate in the slide where you presented the negative profit margin of C2B? So when you look at how Motorway reports, because it doesn't own the car, it reports GMV, which is the full value of the car sold, but its revenue is only the fees that it gets from the dealer. So, and that revenue will be a few £100. So take rate we define as the percentage of the car's sales value that comes in revenue to Motorway. So effectively, it's the amount of money recognized as revenue as a percent of the total value of the cars. And it's important if you want to compare players like We Buy Any Car, who have the full value of the car in revenue because they actually own the car before they sell it on. And when we look at the long term, I guess the question is also about margin. You know, our view is that C2B services will be much lower margin overall when they're established businesses than marketplaces. So, you know, a really good auto marketplace will be up at the 60% margin level. Don't know exactly where C2B will come out, but we'd expect it to be a much smaller, you know, probably kind of, you know, 10 to 20% type margin, I would guess, but haven't looked at that question specifically. So very different kind of return on those businesses in terms of revenue margin.
Great, thank you. So I think we're going to wrap it up there. We've already overrun, but great conversation, and thank you both for your answers, and for everyone for the questions, and for any we haven't got back to, we will.
And thank you to all those crazy people who stayed for an hour and 10 minutes. Thank you very much for being here.
Thanks a lot.
Thank you.
Bye.
Bye-bye.